saying that it's not anything more than, call it, financial infrastructure, it's hard to see how you make that argument today, right? Like that is where most of the interest lies. That is where much of the investment dollars go. But that's inclusive of dollar access to people who might not otherwise have it, right? That's inclusive of, microfinance. It's inclusive of self-custody, right? And so all of those things are part of the core ethos. But yes, at the end of the day, crypto today is in the, call it, financial infrastructure money movement phase. And that means that it is unlikely to fill, the hole that some of these, call it, early libertarians were really focused on.
This episode is brought to you by Zashi Wallet. You'll hear more about them later in today's episode. Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed.
All right, everyone, welcome back to Empire. We got the gang together finally. Santi, Rob, what's happening, guys? How you doing?
Doing well. Excited to see you back. Are you excited that we let you back?
It feels good. I didn't know. I mean, seems like you guys have been thriving over here without me.
I mean,
Thriving.
engagement doesn't lie. So we just got to see that chart of the engagement just continue to trend up.
Speaking of engagement, Santi, you are farming the engagement on Twitter these days, my friend. What is?
I just want to know, guys,
Yeah.
did you make it past the first round at an investment bank? Because if not, I think you're going to have to drop Yano, because Rob, I know for sure, joined. I don't know if it was a major investment bank, but it was an investment bank.
The amount of people.
I don't know. It was a small investment bank. I don't know if you ever heard of it, Santi.
Is it Goldman? I forget which one.
Now I feel like an asshole. Like I know already. Like, a minute into this podcast.
Rob, you're about to get memed too. You know the memes. The amount of memes I saw of Santi. It's like, did you know I worked at J.P. Morgan? Like,
we had the classic like Patagonia vest. We had a Patagonia vest, like, ETH is overvalued, price to sales ratio. And anyways, it was fun. I can't say, I sort of knew that when I hit that tweet and I have 5 minutes and I'm like, yeah, this is going to be copy pasta for sure. And lo and behold.
So people wanted to know, was this a marketing thing that you and Haseeb lined up? Because you and Haseeb were, back and forth and bantering, but, people were quickly realized that Haseeb, and Rob and Dragonfly led your guys' last round. So
we had an LP, potential LP, kind of says, hey, like, are you guys okay? Like, is your lead investor? I'm like, did you listen to the debate? No, I mean, this is what I love about zooming out a little bit. Like Rob and I talked about in the last pod, like there's very few people that I think the best relationships are one where you feel like you can attack an idea without feeling like you're going to attack a person. And I felt that level of comfort with Dragonfly since the very beginning. I was just like, you never want to have someone that you feel like you're walking on eggshells, that they're going to cut it to you straight. And, Haseeb and I have different opinions about valuations in crypto, but that's totally fine. I know Haseeb is still out there. He now is still. He went on Milk Road and do a podcast and still engaging with the crowd.
Where you can't debate him.
I just dropped the bomb and I walked away. I'm like, guys, I know where I stand. I'm not gonna like.
What this reminded me of, Santi? The whole time there's a tweet from this guy Julian Shapiro that I think perfectly summarized what was happening. He said, "This is how Twitter works. You get free distribution and the ability to start a movement or attain self-promotion, despite being, you could be a nobody and you can still start a movement. The cost, guaranteed uncharitable criticism and bad faith attacks. The power of X belongs to those willing to stomach the cost, embrace it, or others will." And I was thinking about you when I read that.
Thank you, sir. Yeah, no, it's this is probably the first time that I've been got attacked from all kinds of sides, but it's great. The best one, shout out goes to this guy, Gabriel Hines. He puts out heaters time, like every day he's posting out a video. I mean, I'm like, I'm close to hiring as a social media manager because he's just on fire. He had a great one about Farcaster, had a great one about Polymarket fake volume, all the stuff we're going to talk about.
Wait, listen, Gabriel actually, like, he had this thing before where he was doing like he was doing this with like swords and katanas and like, and he's shirtless in every video. Is that right? Is it always
Well,
shirtless?
he lost a lot of weight. It was like it started, I think, as like a weight loss thing and a motivation for himself to lose the weight. And actually, I think he's great. I think he's
I
great.
love it.
I'm into it.
It's sort of like Get Rich Nick, which is like maybe the best brand on Twitter right now. So
yeah, best is an interesting word there. The loudest brand on Twitter.
I mean, people hate him, and they go into but his shtick, he keeps like rerunning it over and over again, and it's like millions and millions of views.
Yeah, he gets it.
And
yeah,
so
he gets the game.
Yeah. This is sort of what I came to the conclusion is like if you think you're going to show up on X to have an intellectual discussion, you're very, very wrong. I mean, the content just gets rage bait and polar. The more extreme your view is, the more it's going to get picked up. And I sort of there's no point of having an intellectual discussion. I mean, it's just like it's not what gets highest engagement, and it's just a big problem that we have. I think like enter prediction markets, assuming you believe that their volume is real, which we'll talk about in this episode too.
You're really trying to bait here.
I mean, let's talk about, it's a small thing. Let's talk about the Polymarket data for a second. I care less about basically for, I don't know, Rob, if you want to give a quick overview of what happened, but one of the things I'm curious about is like, it seemed kind of like the Dragonfly versus Paradigm debacle on Twitter, less of the Polymarket Kalshi. But yeah, maybe if you want to give a quick summary from your end of what was going down.
Yeah, I don't know if I have anything good to say. Listen, the reality is like the Paradigm data.
Ron. You're thinking it.
Right. So the Paradigm data guy came out and he said, hey, listen, like some of the dashboards like Blockworks are, maybe overstating Polymarket data because they're, it's kind of complicated the way that the Polymarket data infrastructure works and the way you read the smart contracts. And it might be, some of these people might actually be double counting any single transaction because they might be counting both the taker and the maker. Right. And like, okay, totally makes sense. The reality is, and Jason, as I'm sure you can talk about this a little bit on the Blockworks data side, like that's a common refrain in conversation around a lot of different types of trading that happens on chain, right? Is how you think through, for especially for derivatives, how you think through notional volume, which is like, if you trade $1 at 10x leverage, is that, $10 of leverage of volume versus $1 of volume, and then how you think about like both the maker and the taker side, and what is the right way to report that. There's people who do different things. Like that's like a fair conversation to have. I know one of your data guys, Jason, was asking questions about it to the Polymarket team, and they had kind of told him how to think through the different data infrastructure. And then the entire Paradigm team, I think literally almost everybody came out and retweeted it with various degrees of like, Polymarket, one, like, oh, there's a bunch of wash trading, which the data guy put in his tweet as well, and then various degrees of like, oh, like a couple of people, I think actually I saw, one of the GPs there tweeted that Polymarket itself was like purposely double counting their data, which is obviously not what the original finding said. It said that some of the dashboards were maybe doing it. And that Polymarket was actively telling people how to read the data if they wanted to, and it basically seems like a coordinated hit against a competitor that of a large round that they just led into Kalshi, and frankly, like whatever, I'll just say it, like they just have to do better. Like it was just like
this is kind of the thing I wanted to do. I cared less about the Polymarket data problem because that, like, I think we fixed that. Allium fixed that. DeFi, like a lot of people, that was a quick thing. There's a bunch of different ways.
And all the Dune dashboards already had it right. Like a lot of the other dashboards already had it correct. The people who were
there's
all the data I ever quoted was correct.
There's different interpretations of what Polymarket volume should be: notional, taker, or maker, basically. And so I think what we're doing is just showing all three versions. My question for you two is how this brought up a more meta point of like, how involved should VCs be and for their portfolio companies, basically. So you've got the kind of, I think people were upset with Paradigm because they're like, it felt like a little over involvement, basically. And I'd love to get your guys' take on that.
Listen, I think, and maybe I'll just start because I also want to make the point, right? Kalshi, we can't actually verify their data on chain because they're not really on chain, and Polymarket is. but they report.
I mean, well, on that point, Rob, is what about Kalshi as crypto native? I'm curious.
Well, they're trying to move more on crypto now. So they hired John Wang, and there is a lot of work today to get more crypto native. And so I don't want to discount that. But basically all of their order book today is entirely off chain. They do some settlement occasionally for different types of transactions, but they basically just report notional volume, right? And so to the example I gave earlier, which is like I bet $1 at 10x leverage, or at least the way it works for Kalshi, I bet a dollar on something that is only 10% likely. I'm buying 10 shares, so it's $10, right? And so I think to your second question, Jason, how involved should VCs be? I have been, and I think people know that I am this way, and Haseeb is this way. Maybe Tom less so. Like, we're big proponents of our portfolio companies. I invest in people that I believe in. I invest in people where I like their ideas. I invest in people that I want to see them succeed. And so I'm actively out there all the time talking about my portfolio company founders. And I'm very clear that, I'm invested in Polymarket. I talk about them a lot. I'm very clear that I'm invested in, Inversion with Santi, or I'm invested in like Rain or Agora or like all these other guys, right? And so I think that's really important to do. And I think, anyone expecting the VC is not to talk well about their portfolio company it's crazy, and it doesn't make any sense, right? And I think Sahir from Split Capital had this tweet a couple of days ago, or like, why do people expect the VCs like not to be talking about their portfolio companies?
That's the whole point.
But if I flip that around and I say, okay, well, a coordinated attack against a competitor of a portfolio company in which I basically misrepresent what is happening, which I think is an inarguable and fair statement to what happened there. That seems like a step too far, and not something that I'd be willing to do. And I think people need to do better. I think there's a really an interesting conversation here about what Keith Raboy is doing around Airwallex as well. But I don't. That's my perspective, and probably all I'll say on the matter. So,
look, I mean, I definitely agree with Rob's point. Like, VC should be supporters publicly about their portfolio companies, and there's ways of doing that. You could argue that going in, trying to discredit a competitor is probably not the best. Like, out of all the things that you could highlight out of a portfolio company, maybe going out and criticizing a competitor is not the best look. And I just think like you invite more criticism where you could be talking about the positive stuff that Kalshi's done. Made some key hires, it raised around. Like, it's more of an interesting dynamic. Like this Polymarket, like this prediction market war, it reminds me a lot of like Uber and Lyft. And where does it end? I do think that there's a broader conversation around monetization of like Jan, in the prior episode, we were talking about Robinhood potentially displacing Kalshi and Robinhood contributing a ton of volume to Kalshi. And I think Rob made a comment around, hey, we got into talking, hey, if you're a lead investor, how much of that was disclosed ahead of the round? And I think it begs the question, did Paradigm feel an egg on its face? And so it went out and like, it just like people can now make a storyline. It's easy to like now construct that narrative, which is may or may not be true, right? Maybe they did know about it. And maybe they were like, hey, what probably would have been a better thing if you're a Paradigm, which by the way, I think Paradigm is one of the most actively involved VCs in crypto. Dan Robinson single-handedly, like just probably built a large part of the Uniswap V2 and V3. Like they just have and Giorgio's like they have probably one of the most.
I mean, Tempo, which we should talk about later.
Tempo. So I just think this is like off brand in many ways, and it just I don't know. I can't explain why this. I know like Kalshi and Poly, like there's a lot of rivalry there and heated kind of. I think I don't necessarily think we need to talk about it here, but it never ends well in my opinion.
Yeah, I think it is important to note, like, listen, they've done tremendous amount for the space and for Ethereum specifically, and especially on the technical side, the research side. They, Dan and team and Georgios, like they've been, I think, just huge contributors for a long time. So, really important to note that, and not trying to kind of beat up on them, but I just the whole thing I think left a bad taste in my mouth, and I think some of the others around the situation, and so. I think, as anybody knows, I'm not one to hold my tongue.
This episode is brought to you by Zashi Wallet, your gateway to buying, storing, and spending encrypted Bitcoin. Zcash is decentralized digital cash, encrypted to preserve agency and safety. With a fixed supply of 21 million and a proof of work consensus, Zcash is encrypted Bitcoin. With Zashi Wallet, you can swap Bitcoin or any other cryptocurrency into Zcash and stay shielded by default. Thanks to Zashi Wallet for making today's episode possible. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Let's shift gears. Let's talk about the other thing that Paradigm did this week, which is Tempo Testnet went live. So for people who missed it, so the list of partners was probably the most impressive launch list of partners I've ever seen for a crypto company. It was Anthropic, Deutsche Bank, DoorDash, Mercury, Nubank, OpenAI, Revolut, Shopify, Brex, Gusto, Kalshi, Figure, Ramp, MasterCard, UBS. And I think a lot of people there's actually a summary from this guy, Phil, who kind of highlighted some of the things with Tempo, right? 500 millisecond block times, fully EVM compatible, no native gas token, an enshrined DEX, a new transaction type that has native transaction batching, native gas sponsorship, native support for WebAuth keys and Face ID keys. I think actually I would say the industry reception to this was, I would argue, very positive. And I think people were very impressed and maybe a little taken aback by how quickly Tempo has been able to get to market really impressively. That was my take reading a lot of kind of talking to people, developers who are looking at this and other founders who are thinking about building on Tempo. Is, I would say, the reaction was very impressed. But I'd love to hear your guys' take on this.
Well, also Klarna, who I think announced 1 or 2 days ago about their full plan, like their stablecoin, Klarna USD is going to be launched on Tempo. I'm paying a lot of attention to that. But yeah, it goes back to...
Santi, did you see that Klarna is launching a wallet? They just announced this with with Privy.
With Privy, that's right. Yeah. So the acquisitions that Stripe made are starting to make a whole lot of sense. Yeah. I think going back to what does this mean for like people talk about monetary premium. What's interesting here is, of course, no native token. So gas is paid in stables. That's something that, makes a lot of sense, candidly. And yeah, we've talked about reasons why Tempo probably doesn't grow, or it's handicapped in terms of growth because Stripe is there, and that's there's reasons why you wouldn't want to deploy. But it begs the question, what is the moat of these systems if someone like Tempo can very quickly have this type of traction and convince probably do better BD muscle than other networks? And what are the true moats of these systems where you can have someone like that launch your own? And of course, it has a weight of Paradigm and Stripe, but it's very interesting what's happening in real time, to be honest.
Yeah, I don't have a lot to add. I mean, listen, I think the initial documentation that they set out does look super impressive. Clearly, they've done a great job here. I think the speed has everybody really excited, and it's very impressive. It's probably true that a lot of the core infrastructure here was stuff that Paradigm was already working on through Reth, and so that's probably part of the speed. So, and maybe somewhat unclear how the timeline worked there. But there's nothing bad to say about what's happened here and what they put out so far. I think Santi's point around just what does this mean for the mousetrap that Stripe has, and the broad set of companies that they've acquired, and the use cases that they want to enable on blockchain rails. My guess is they're able to force a lot of people onto Tempo, and this is going to be very successful for them in a lot of ways. I think it's probably going to be one of those situations where it's kind of call it a commoditized complement, i.e., right, they will essentially give away, Tempo for free, right? When all of the things that come with Tempo, but they will do it if you're, paying for something else within the Stripe ecosystem. I think there was a little bit of back and forth earlier this week around how Stripe was charging people $1.50 or something for a stablecoin transfer. And, clearly I think there was some misunderstanding around, what that means, because people are saying, oh, well, like, if I move $1, stable coin on Solana, it's like a fraction of a penny. And so how are they going to compete this way? But clearly, like, that's not how pricing works in payments. And there's a broad set of things that go into that around authorization and settlement and interchange fees, et cetera. And clearly, my guess, and I think I gave this example on a prior podcast, but one of the things we had heard before was that Bridge and Stripe won a deal against another provider called BVNK because they had showed up and they said, hey, we will give you Stripe authorization for free, right? And so what we're seeing here is like a clear, just strategy around building the entire stack and giving certain parts of away for free to be able to, and building the best possible product to be able to win the whole deal. Right?
So
and
let me pose this question. All right, go Santi.
Well, I was gonna say, this is a classic bundling we're seeing, by the way, which is like the muscle of Stripe. Now, I'm gonna have to drop in a minute here because Rob was late to the podcast because he was at Columbia evangelizing and converting unpaid interns. Nonetheless, Stripe 100 billion secondary market equity. Good luck trying to get your hands on it because it's hard to get. Tempo raised at a $5 billion valuation, I believe, and raised like $500 million. If you go down the list of L1s, now I'm not even sure they're going to have a token, right? It's like Base, Coinbase, similar dynamic. Probably
I would guess both Base and Tempo have tokens at some point.
Let's just assume they will. But like, that's what I'm saying. Would you rather own Stripe equity at 100 billion or Solana that's 80 billion or Ethereum at 380 billion or BNB at 120 billion? Or even Monad and some of these emerging kind of L1s that both you and I, Rob, have exposure to. What's it trading at now? I'm going to keep playing this game on podcasts until people like just kick me out. But Monad's trading at 2.6 billion. Would you rather own Monad at 2.6 or hypothetically Tempo at 5?
I mean, it's a tough question. I think, to your point, we actually just talked about this at the Columbia class I was guest lecturing at. So I got the exact question around like, how do you think about Tempo? And how do you think about Tempo relative to public blockchains? And, will there be a lot of payments that come onto Tempo, and will that take over stablecoins? And I'll give the same answer here, which I essentially gave in this class, which was that like, I expect that Stripe is going to pull a bunch of volume through Tempo. And I think there's no doubt about that. Like, it's probably the best, most innovative payments company of the last decade, right? And they've, John and Patrick Halls have done an incredible job. And they're clearly doing a great job with this, right? But I do not believe that if you think that stablecoins are going to come on chain in a real way and payments are going to come on chain in a real way, that over time, Visa will want to send transactions to Tempo, that Adyen will want to send transactions to Tempo, that checkout.com will want to send transactions to Tempo, right? And so what does that mean? It means it's a bundled product, to the point that you said earlier, Santi, but it is unlikely to be, call it a permissionless, all-weather use case for anybody type of chain, which means that one of two things have to happen. They either have to meet somebody else, they have to have some sort of interoperability, or there will just be a lot of silos, right? And that might be part of what happens here. And so I expect that, like, for instance, like Monad is leaning really heavily into payments as well. In a world where, people care about meeting somewhere that is, coordinating trust and that isn't an interested party, maybe somebody like a Monad would make sense, or a Solana for that, and for that fact, because they are, very focused on this as well. That said, like, the easiest mousetrap right now is to take an existing distribution, pull them through your funnel, pull them onto your blockchain, and we're, in the near term, we're going to probably more actual real payments volume on Tempo than we will have seen anywhere else in crypto at this point.
I'll get tired of saying this, but we're going to go back to the most valuable companies in crypto are Tether and Binance, right? And they don't share much of that revenue on chain. Like they have spillover effects, but I think this might be an example where we keep going back to this token equity and where value accrues in the stack. And I think you're now seeing in real time, like Stripe and even Coinbase, like they're using public infrastructure to monetize their real business, equity business. And I think it's something that begs the question around, yeah, all this payment volume is likely going to come on chain. Yeah, stablecoins are great, room temperature semiconductors, but you're seeing a very, very savvy founder-led organization appreciate that and then reap the benefits for their core business. And I don't know what kind of, it would be actually pretty interesting to see what kind of deal they struck with Green Oaks and those guys that put in 500 million into Tempo. Surely there was some discussion around the token. Surely it was some discussion around rev share and whatnot. But they're also investors in Stripe, as I understand it, right?
I feel pretty confident. I mean, Tempo will have a token.
Yeah.
I think there's actually a Polymarket on this now for when they'll have a token.
I'll leave you with this question, gents, because I got to drop. There's an interesting post with Ryan Watkins, who's coming out and saying, change his tune on Ethereum. My question to you, gents, I submit: is Tempo World War III resistant infrastructure?
Why? Because that's Ryan's point about Ethereum for why he's bullish. Is that why?
I think you should pull up his thread because it was a lot of interesting stuff in there. But that was his point.
I'll say this, and maybe I'll get a bunch of like Ethereum bulls in my tweets after this too. But I am certain that no blockchain is World War III resistant at the moment. So,
amen.
Santi,
all right,
do well.
Okay, all right. Thank you. Take care, guys.
Rob, last question on this note. Does it feel like so you don't think the mega? All right, here's the two camps I think people are in. One camp was Tempo tech quality and architecture is like this. Both the simplicity and the build out speed is one of the most impressive things in crypto this year. The other side of it is, crap, it feels like actually the mega conglomerates are just going to win here. Whether it's Stripe or, yeah, sure, maybe Audion's not going to send their payment flow to Stripe's Tempo chain, but maybe they're going to launch their own chain. And crap, what are we doing here as crypto natives?
Yeah, I mean, I've been a proponent. I've been writing about this for a while. That I thought, call it full general purpose chains were probably unlikely to win the payments use case, right? Because that is not call it full decentralization and complete trustlessness is not actually what the end customer cares about in this case. And so I think for a lot of use cases that are serving corporates, it is probably likely to continue to be true that a lot of that flow, a lot of the interaction with blockchains happens on either corporate run chains or happens on maybe not corporate run chains, but purpose built chains that are maybe sometimes it could also be an L2, right? Robinhood is trying to do that. But I do believe that a lot of blockchain activity is going to exist on non-public Ethereum, non-public Solana, non-public Monad, whatever else, and is going to be abstracted away by corporates who have some stake, right, and are able to control the experience that they're providing. So I've been talking about that for years. I've had Solana bulls in my DMs and in my mentions for a long time about how wrong I was about that, and I think we're starting to see how I was probably right about that. But all that said, I am a general believer that more and more things happening on blockchain rails is good for all of us. And as the rising tides lift all boats, this will be good for Ethereum over time. And, I'm just happy to see that the smartest people in the world are innovating around using this technology, which I think is, kind of strictly better than the current infrastructure that we have today.
This episode is brought to you by Zashi Wallet, your gateway to buying, storing, and spending encrypted Bitcoin. Zcash is decentralized digital cash, encrypted to preserve agency and safety. With a fixed supply of 21 million and a proof of work consensus, Zcash is encrypted Bitcoin. With Zashi Wallet, you can swap Bitcoin or any other cryptocurrency into Zcash and stay shielded by default. Thanks to Zashi Wallet for making today's episode possible. As always, investments in blockchain technology involve risk, terms, and conditions apply.
We should spend a bunch of time on, based on the point I just said to you, around on Nick Carter and Ken Chang's post this week as well.
Yeah, let's go there. So, let me pull up the post for people who didn't see it. So basically, this guy, what did Ken build? He built Avo, I think it was.
Yeah, he was an early engineer at Ribbon, which ended up becoming Avo, right?
At Ribbon. Yeah, that's right. Here, let me pull up this tweet. All
and for
right.
people who don't know, Ribbon was essentially a vault that you could put money into that would give you yield based on continuing to write options, essentially. So it was one of the first option vault products in crypto, early DeFi summer type product. And then they kind of turned into Avo, which was a perpetuals product.
Yeah. So, okay. So Ken wrote this piece, I think last week. He said, I wasted 8 years of my life in crypto. And roughly the summary is that VCs have just obliterated a ton of money backing stupid projects. And all we've really done, well, it's not even about the VCs. It's about, I wanted to build this decentralized financial system. And all I really got was this like hyper financialized, massive global casino. And we didn't really change the world at all. We just built this huge, I think his words, biggest online multiplayer 24/7 casino our generation has ever concocted. It's just a speculation and gambling hyper system that's really just a mirror of what the economy is now. And I think a lot of people took this as like there's always, I feel like every like once a year there's like a post like this where it's someone kind of, I'm not going to use the word crashing out, but it's someone who says, like, you know, what are we doing here? Like, I'm kind of throwing my hands up and giving up. And I feel like this was kind of that post of the year. And I think Nick Carter, there were a lot of responses. Joe Carlson or Joe Gunter had a great response to it. And Mason I think Pantera had a great response. And I think Nick probably had the best response, but would love to hear your thoughts on this.
Yeah. To your point, this happens a lot, right? And one of the things that I think is worth pointing out here is this also used to happen to me all the time when I worked on Wall Street, right? Is you would hear people, they would leave the bank or they would leave the hedge fund and they would say the same thing, right? Like we're moving, numbers around a screen. It has no positive impact on the world. It's all a big casino. I regret spending my time here. And so this is I think a general plight of people who work in what I would call finance, right? And like financial infrastructure, and people whose whole job seems to be, or often seems to be around, building products to make money, right? And so I think it's important to probably pull that out a little bit and realize that this isn't a crypto specific point. Now, that said, in crypto, we're a bit of an intersection of the technologists and the financiers. And it seems like we've had, depending on the year, more of a Silicon Valley ethos, or call it maybe a cypherpunk ethos. Then some years we've had more of a Wall Street ethos. Today, definitely like the Wall Street, finance side of crypto, I think has taken hold more than the Silicon Valley cypherpunk side. And that does mean we've had the corporates, and we've had Stripe, and we've had Robinhood, and we've had the DTCC, and all of these guys trying to use blockchains. And so that, and because of that, we've also had more focus on the financial products. So the perpetuals and, the things that people call, the casino, right? Even, Polymarket and Kalshi, there's all this conversation right now around prediction markets on whether or not it's gambling, right? Which is, I think gambling is clearly not correct unless you mean that all financial markets are gambling, but it is a financial product. It is an exchange, right? And so all I would really say is that, and Nick did a good job of laying this out, is that crypto is a weird intersection of a lot of people and a lot of ethos. And if you came into this around, you were an anti-state libertarian and that you wanted to have, call it hard money again, and you were really worried about inflation, it's hard to say that, crypto hasn't let you down, right? And I totally agree with that. But if you came into this world and you said, I like to build at the bleeding edge of new financial infrastructure, then you're probably happy on where we're going right now. And calling it a casino is something that, I think is pretty flippant when you look around like everything that's happening in the space right now. Like, they literally just talked about Tempo and Stripe, but saying that it's not anything more than, call it financial infrastructure, it's hard to see how you make that argument today, right? Like that is where most of the interest lies. That is where most of the investment dollars go. But that's inclusive of dollar access to people who might not otherwise have it, right? That's inclusive of, microfinance. It's inclusive of self-custody, right? And so all of those things are part of the core ethos. But yes, at the end of the day, crypto today is in the, call it financial infrastructure, money movement phase. And that means that it is unlikely to fill, the hole that some of these, call it early libertarians were really focused on.
Yeah. Yeah, I think that's really well said. I mean, I think crypto really is just gives you a tool to build a new financial system. And some people are going to build gambling platforms, and some people are going to build 100x levered casinos, and some people are going to build payments rails, and some people are going to build on-chain credit, and some people are going to build perps. And it's whatever you do with the technology. And I think he is hitting on a point though, which is, I think there's strong founder burnout in the industry right now. And what I've noticed, because I'm in all these founder group chats and all this kind of stuff, there's two very different groups of founders in crypto right now. There are the people who are building for where I think that they think that their end customer is kind of the anon trader on Twitter, right? It's the people who are going after the target audience of probably who trades on Hyperliquid. That's a really, really, really good area to build for if you want to make money quickly. There's a reason people build for that. It's a really hard customer base to build for if you want to build a business that compounds over 5, 10, 20 years. It's just a really tough core customer base. Even Hyperliquid. I think Hyperliquid's amazing. Jury's out on if these, if we then go find a new perps platform. And so I think, and then if you contrast that with other founders, who's not burnt out right now? Michael Shalov at Fireblocks, Jeremy Allaire at Circle, Paolo at Tether, even in the companies that are less big than Fireblocks and Circle and Tether, it's there's all these up and coming founders who are building in the space that you guys are funding, right? Whether it's RWAs or payments or credit, it's just a different core customer. And I think for founders who are feeling a little burned out, I would really spend time thinking about if we did enter a long phase of consolidation. Let's say we did enter, hopefully numbers go up next year. But if we did enter a long period of consolidation in crypto, have you found the problem that you're genuinely excited about solving for the next decade? And if you haven't, you will end up like Ken Chang here. You will get burnt out. And if you have, it doesn't really matter what's happening with the numbers or with your finances, or if you can raise money, because you're working on a problem that you actually genuinely care about solving.
Are you burnt out? What do you feel right now? Because you seem energized to me.
I'm energized. I'm actually really energized. Yeah, I would say it's funny. Someone who knows Mike and I really well. So this is actually December. In 2 weeks, we'll have hit 8 years of Blockworks. There's ebbs and flows, right? We've been really burned out at periods of time. Usually we're not burned out together. Usually one point Mike is burned out and I'm energized, or I'm burnt out and Mike is energized. Someone who knows Mike and I really well and has seen us build Blockworks said, I've never seen the two of you so energized at the same time. Or I haven't seen you guys so energized at the same time in a while. And I think it's because we found I mean, it's not public. The thing that we're launching is not public yet, but we'll share it soon. The problem that we are trying to solve now is the problem that I would love to spend at least the next 10 years of my life on. And that's why it's energizing. And when you're able to have, I think when you're able to think like that, it just unlocks a lot of clarity. So,
yeah, I think that was perfectly well said around, are you solving for a problem and solving for a customer base that you want to serve over a long period of time, right? The incentives in crypto, and I think Ken kind of makes this point and Nick makes this point a little bit, the incentives have all been a little bit misaligned, right? Because it has often been, and they talk a little bit about this with the VCs, it was okay, well, what are the things that have a lot of users and a lot of volume really quickly, because that usually correlates to, the token price doing well, which usually correlates to the VCs making money and correlates to the founders making money. And all of that can happen relatively quickly because we launched these tokens while these companies are still early stage startups, right? And so that misaligned incentive, I think, has caused a lot of people to build to make money and venture capitalists to, back things to make money because, that's what my LPs asked me to do and that's my business, but aren't necessarily things that people believe or they want to spend their time on or they believe in, right? And so to your point, the more you can spend time on the things that excite you over a long period of time, and the more freedom you have to do that, that you are going to be better off. And one of the things that I would say is, if you look at the early days of fintech, right, or this most recent fintech wave, you look at like Robinhood, which started, call it 12 years ago now or 13 years ago now. And for years, there was all this talk about how Robinhood was just gamifying trading. They were making it a gambling platform. It was a net bad for everybody involved. There's just absolutely no reason this thing should exist. Why are we doing this type of stuff in fintech, right? And Vlad and his co-founder spent, call it the last 13 years building what is now probably the newest generation of a bank for people of our age, right? And building like now broader financial access, broader financial products, and really trying to create the next generation financial institution, right? And I think in many ways there are a lot of crypto companies that are going to follow that same trajectory. And so just finding a wedge product that maybe has call it more speculation in it and allows access for humans to do the things they want to do, right? We are not forcing humans to do anything else, but to build for call it a broader mission. That's something that if you can get excited about, it makes complete sense. And I think, we'll give people energy over a long period of time.
Yeah. And the last thing on this note is, and I do want to talk about Farcaster. I want to get your take on it is I forget who said it. Someone said crypto is the ultimate Rorschach test, right? It's like, people project their own belief and fears and hopes and biases into whatever they're building. And if you see crypto is just one big casino, and it just like, I actually think that's more indicative of how you kind of view the world. And it's a bit of a pessimistic view on the world. Yeah, things are becoming super financialized, like hyper financialization. Yes, tough to put that genie back in the bottle. If you get really pessimistic about the future, when you think about that, I feel like that's more indicative of just your underlying views about how you view the world. And yeah, like, are you an optimistic person or a pessimistic person? Are you a hopeful person or not? Like, are you fearful or excited? And I think that one easy way to hack that, if you are not naturally an optimistic person, is to actually try to maybe think about who your customer is actually. And if you go talk to a lot of the traders, like I feel like if you go to talk to a lot of the kind of anon traders on Twitter, they genuinely are pretty skeptical, pessimistic people. They're great. They've made a lot of money. They've done extremely well for themselves. They're pretty pessimistic, skeptical people. So if those are your core customers that you're talking to every single day, and that's making you miserable, it's going to make your company miserable. You're not going to do well. It kind of all feeds on itself. So that's just a thing I would think about.
Yeah. And I'll make one broader point, which is I don't really think this has anything to do with crypto, right? Like hyperfinancialization is not a crypto specific point, right?
Yeah.
I think there was an article.
Pull up any sports game, and you'll see gambling on every, in the words of every announcer, right? So
everything. I think I saw a tweet yesterday that was for the first time ever, and it's now ticking up that like young men are seeing sports gambling as a bad thing, but it wasn't, or they're more likely than ever to see it as a bad thing. But that wasn't true until recently, right? And and then obviously we just talked about Robinhood and how so a significant amount of its volume is in, call it, these 0-day options, right? We've talked a lot about prediction markets are a way for people, they're very social. People like want to have conversations around, and they want to use Polymarket as a sort of a way to engage with their friends around certain call it current events. But it has added finance to that. And now the way people engage with social media is now all around financialization as well, right? When we think about the payments that you get on Twitter, or there's a lot of what we've seen on TikTok and others. And so I think the reality is that we've created many more ways for people to engage with finance, and we've opened up the aperture. But I think that does wear on people a little bit when everything is about finance. Crypto is an easier way to create a permissionless financial product, but it is just part of the cultural zeitgeist that is happening right now. And everything in life is a pendulum, right? Hyperfinancialization is a pendulum that will probably swing back the other way. Some of the people that were most bullish, hyperfinancialization, a few years ago, I'm actually seeing some, things that were written on Twitter over the last couple of weeks that are saying, okay, well, like now I'm betting that like the pendulum starts to come back the other way. And, we're seeing uptakes in religion, and uptakes on people trying to turn off their phones, and uptakes on people trying to do other things that, had kind of, gotten, I guess, much further into, the culture that, people don't always think are good for you. And so I don't know. I think crypto is in many ways just a reflection of, the users, to your point, and its users are, 25 to 45-year-olds who are, educated and, are often in the tech or finance industry.
Yeah.
That's it.
Yeah. But that's changing. That's changing. Actually, this is maybe a good segue. I don't want to spend too much time plugging our own thing, but we launched this thing called Lightspeed IR today, which is an investor relations platform. And kind of the core reason behind it is what we're talking about, which is there have been these phases of crypto, right? First phase was like the bootstrap era, super retail driven, Bitcoin talk threads, Discords, Telegrams, like really fun era, like very important era. But from an institutional perspective, entirely uninvestable, I would say. Then came kind of the second phase, which is maybe like 2017 to 2023. This is kind of like the scale up era. And this is like exchanges professionalized, custody got solved, DeFi protocols found product market fit, and really like on-chain businesses started to look less like toys and more like companies, I would say. And I think we just entered phase 3, which is the institutional era, right? We're talking about Stripe's chain, Robinhood has a chain, Klarna has a wallet and a stablecoin, banks are issuing stablecoins, prediction markets are integrating with real news outlets or major news outlets. There are real revenue and cash flows are accruing on chain. And actually what comes along with this is the marginal buyer is changing. So the marginal buyer, basically the flows from the last decade came from two places, retail and crypto venture. That was like all the flows in crypto, retail and crypto venture. Now the next dollar is coming from liquid token funds, multi-asset hedge funds, asset managers, macro shops, family offices, eventually I would argue even pensions and endowments. We saw Harvard just increase their Bitcoin exposure 3x. That'll eventually trickle down to crypto tokens. And so anyways, long story short, we launched this investor relations platform. We think it's way too hard to diligence tokens today. Way too hard to look at tokens. Everything's really fragmented. You don't trust the numbers. And so we launched so that's on the investor seat. For companies for protocols with tokens, it's really hard to keep track of your investors, right? You don't know who holds your token. You don't know if they're located in Singapore or Abu Dhabi or New York. You don't know if they work in crypto, if they don't. There's no way to communicate with your shareholders. And so we launched this platform. So we're excited about it. You guys should check it out. I don't want to shell it too hard on this, but yeah, lightspeed.vip. If you go to lightspeed.vip, you can we're launching it in Q1, but we're giving a couple people early access. So yeah, lightspeed.vip, there's a button, it should say get access, click it, apply. It's cool.
All right, when I do it after this, are you going to give me access?
I'll give you access.
Right,
I got you.
Okay.
Bro. I got you.
Perks,
baby, perks. Yeah, it's cool. It's like if you run a fund, our hope is that Lightspeed IR kind of becomes your hub for Solana information, and if you're building on Solana, it kind of becomes your hub to connect with investors. And so yeah, we're excited about it. We think zooming out from our platform, because people can go check it out if they want. Broadly speaking, I think investor relations is not something that's done in crypto today very well. There are a few teams that do it. Maple hosts quarterly calls. Like, I've seen some people do quarterly calls and quarterly reports and things like that. I think we'll wake up I think 2026 is the year that investor relations becomes a core function of teams. I think it becomes a team inside these companies, just like it exists in normal capital markets, right? You have an IR team, you have a comms team, a marketing team, product team, an eng team. You also have an IR team. I think that'll end up happening in crypto.
I mean, it has to, right? Yeah. And to your point around the people that you talked about, a lot of them are, people that have real revenue, right, and real cash flow, and that are trying to build for the long run.
They should do it because it's a way to stand out if they're actually building something real. Like I saw Brian Pellegrino from Layer Zero on a podcast. He's like, our target is getting to 100 million ARR in the relatively near future. That's a real business. Yep. You got to talk about that. You got to talk about that and communicate that message to investors. So
this episode of Empire is brought to you by VanEck's on-chain economy ETF, Node. If you feel like you are constantly missing alpha, never have time to scroll through crypto Twitter, Node is for you. Node is actively managed by an experienced team with years in both TradFi and crypto. That team at Node looks to capture, the most powerful trends across all of crypto while actively managing volatility as markets evolve. Super important in today's environment. Check out Node's track record so far at vaneck.com/empire/node. That's vaneck.com/empire/node. You can also, a little easier, just click the link in the show notes. Thanks to VanEck and VanEck's on-chain economy ETF Node for making today's episode of Empire possible. The Uniswap trading API solves the problem of adding crypto to your products without the hassle of needing deep crypto expertise, ongoing maintenance, or liquidity aggregation. The trading API provides access to the Uniswap protocol, which has processed $3.3 trillion in all-time volume, handled over 465 million swaps from more than 25 million addresses, all with zero security breaches. Developed by Uniswap Labs, the US-based team behind one of the most used DeFi apps. Access some of the deepest liquidity in crypto, combining both on-chain and off-chain sources for optimal pricing. The same liquidity that powers billions in swaps, now available via a singular API. Thanks to Uniswap for making today's episode possible. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Let's talk Farcaster. Dan Romero, the founder of Farcaster, posted on Farcaster and said, yes, it's basically state of Farcaster. Let me pull up this post. It says, state of Farcaster, December 2025. We've been working on Farcaster for 5 years. The goal has always been to build an at-scale, decentralized social networking protocol with 1 billion people using it. Hard problem, and while we've made progress, we're still orders of magnitude away from achieving the goal. Since the early days, we've believed 2 things matter most: sufficient decentralization and product-led protocol development. We spent the last 4.5 years with a social-first strategy. We shipped a working version of the protocol that was sufficiently decentralized. We allowed multiple independent teams to permissionlessly build on it and integrate it. However, despite many different attempts, we haven't been able to find a sustainable growth mechanism for the Twitter-like social network, i.e. we have not found product market fit. And so they're pivoting. He said, we're focused on building a great wallet, and we'll get more people to use it. Every new retained wallet user is a new user for the protocol. We tried social for 4.5 years. It didn't work for us. Wallet has been growing, so we're doubling down on that direction. So TLDR, Farcaster raised, I think it was 150, 200 million to go build a kind of decentralized social.
I think it was 180 in total across 2 rounds, yeah.
180, okay. Raised at 180 to go build this new social platform. Hasn't really got too much traction. I think probably around 25, 30,000 maybe monthly active users or weekly active, they've got tens of thousands of users, not hundreds of thousands, not millions. They're pivoting. So they've got this wallet it's a great wallet experience. I've used it a few times, but they're pivoting to build a wallet. What do you think about, I guess when you see, first off, are you guys investors? And second, what do you think about this pivot?
So we're not investors. I think, listen, the pivot makes complete sense to me, right? And so, the last raise, I think it was $150 million around early 2024, right? So we're talking, it's been, call it 1.5 to 2 years. Since they did that, there's been a conversation for a long time. This goes all the way back to 2021 around this, call it, and honestly, actually way before that, around, what I would say the Chris Dixon view of the world, the read, write, own view of the world, right? Where it was, hey, listen, if I can have ownership of underlying protocols and networks, I can have ownership of assets that aren't just monetary, but allow me to participate and other types of networks. And then I'm more likely to incentivize to do them, right? And so that means that blockchains will not just be good for monetary assets, but they'll be good for all types of assets, right? And Farcaster was kind of built on this idea that you could build a better network of socially like-minded people and a better social graph through decentralization and through the use of tokens and et cetera. And, a lot of really, really smart people believed in that future. And it could be, by the way, that they're just too early. Right. And so, that round that there was $150 million at, I think Paradigm led it, Ben Andreessen was in it, Han, Uniswap Ventures, Variant, Coinbase and Ribbit and Multicoin are also investors, right? There's a lot of really incredible investors in there. But what we've seen so far is that, there just hasn't really been a uptake for that reason on any of the social products. The products and the way people define where they spend their time when it comes to social is, are they addicted to, in some way, this product? Because are they meeting their interests and their friends and serving that dopamine hit where, in a way that is, new and novel, right? And so when I think about the history of social, what we essentially had was that, Facebook allowed us to build a social graph with our friends, right? And to see what our friends were saying. Instagram allowed us to see a social graph with our friends, but to do so with a picture format. TikTok came along, Twitter came along, and TikTok came along, and they allowed us to see a little bit of different types of graphs, right? Because now it was more of an interest graph, right? Like, it's not just, okay, what are my friends doing? But if my friends are interested in something, then maybe that is interesting to me as well. And is there a way to, build me the excitement around using this platform because of that, right? Farcaster always seemed to take the point of view that they were, in many ways, recreating what already existed, but doing so with a different ethos. And in my experience, that is just not how product works, right? And that is not how people decide to use something new. And so you have to build something new and novel. So it hasn't worked, and that's fine, right? Like, that's the history of startups. And so this pivot, what it really looks like to me is they're embracing what is working, which is people want to engage in financial activities on blockchain rails. And that actually, frankly, could be a good top of funnel for them to make the social work, right? And so actually, like, in some ways, people see it as, or I've heard some conversation around, well, they're, kind of going away their original ethos. But if the ethos is to get people to use their social product, well, it might be true that, this is more social than ever because finance is part of being social. So I think it's a great pivot for them. Listen, I have nothing but, well wishes for them. I'm not really a Farcaster user, but I've got an account, and, I hope it goes well for them.
Yeah. I have similar thoughts. I mean, one is just social is really, really, really freaking hard. You have massive incumbents with crazy network effects like TikTok and Instagram and stuff like that. And it's like, yeah, you just have to have a differentiated product or find a niche or you're not going to win. And you said that, people repeated that ad nauseum, so I won't say anything else on that. The other big bucket, though, is I think we have been overweight on people wanting to own their own data. Remember, when Farcaster started, it was, hey, you can port your social graph. You can port imagine if you could leave Instagram and go join TikTok. I forget what that pitch even looks like now, because it doesn't even fully make sense in my head, but it's like the portability and monetization of your data was, I think, one of the core premises of Farcaster. And it turns out either people don't care about that or people don't care about that yet. And it does feel like, to me, the world's actually going in the opposite direction. I was just spending a bunch of time with have you heard of WOP? WHOP?
Yeah, I've got I know somebody that works there. So.
Yeah, so if you haven't heard of them, they're an incredibly hot startup. A lot of people a lot of people are talking about them. They just hired this very good machine learning person from Facebook, got a lot of attention. Anyways, they let people, one of the hottest ways to make money on WAP is actually just like sending your own data to these AI companies. And people get paid to do that. And I actually think that's the way the world is trending, is people care way less than crypto people like to think about, like, their privacy and their data. And actually, if you can get paid for it, or gain publicity or reputation or power or money or whatever it is, you'll give all your data away. And I mean, we're giving data right now we're going to publish this on Twitter. We're giving that to Twitter for free. Why? Engagement and distribution and things like that. And so, yeah, I think this idea of data portability and monetization just maybe isn't as strong as crypto people thought it would have been originally.
Time and again, we have seen for mass appeal products that, having privacy does not matter, right? So if it is a product that requires you to go to get a large amount of people to use it, that then kind of creates this like flywheel or this moat, it's just, privacy is not a wedge. right? Privacy matters for a subset of people. It mattered for a lot of, really crypto natives, but it just hasn't mattered for mass appeal. And I don't think, maybe we'll get to a point where we'll be under such mass surveillance, which is kind of already happening, but people don't seem to care. But maybe we'll get to a point where in the future, call it, a mass, conglomerate of people care about that, but it just hasn't been true yet. And so it could be early, but it's not a wedge. And if people try to pitch me on that wedge today, it's really hard for us to get excited about that in a venture outcome.
The last thing I'd say is whenever we've built bad products at Blockworks, it's because we sit on our high horse and think that the market could want this potentially. And whenever we build really good products and end up making a lot of money, it's because we just go talk to our customers and ask them what they want. And then we try to build the best product in the market for that. Actually, someone who's kind of taught me this is the Guy at Athena. I think Athena has not tried to reinvent the wheel too much. They just make marginally better products than all the time than everyone. And what I'm thinking about, right, the reason I'm kind of bringing Athena up here is I was just looking at their Hyena product before this podcast. It was like, if you're it's not some revolutionary product, but now if you're trading perps and use USDC as collateral, you can earn interest. It's a very small thing.
USD, you mean?
USD, yeah, thank you. You can get paid USDE rates to trade the same perps as if you were trading with USDC as the collateral and getting no interest. And it's just a very small thing, but the market wants it. So anyways, I don't mean to shill Athena there, but it was just like, it's an example of like, just go talk to your customers and I think build what they want and try to solve their here and now pain points.
Yeah, I 100% agree. Like, and that's, obviously what Farcaster is doing here, right? They're going and finding the customers where they're at instead of trying to build a product for where they want the customers to be. So, congrats on them trying to, they're making this move.
Yeah. Content of the week, Rob. What do we got?
Content of the week. All right. Last week I showed a very Jonas Christmas. And right. I don't know if you heard that. And I got a little bit of hate for, my Christmas movies. So this week, I would just say I'm in a rewatch of Succession right now. I feel like I've got a little bit of time around the holidays here. And I forgot just how funny Succession is. Like, it is just so funny. And so that's my content of the week, rewatching Succession.
I have a movie for you, which I think you will like. It's kind of thriller horror-y. It's called The Menu. Have you ever heard of this? I've
seen it. Yeah.
You've seen it? Do you like it?
Yeah, The Menu is cool. It's like a cool movie. Yeah. Well, because I will also say, and I'm going to get now hate for this as well. I also consider myself a little bit of a foodie. And so I've eaten at a lot of a lot of restaurants that I think that movie is trying to make fun of.
Yeah, exactly. So anyways, that was the movie. It's a decent movie. It's called The Menu. Rob, good to be back with you. Booted Santi this week. Maybe next week we'll get the three of us.
I am excited. We should go do it in person around the holidays.
Let's do it. I think next week we will do our predictions podcast.
All right, let's do predictions in person next Thursday.
Done. Lock it in. All right, folks. Have a good weekend. See you Monday.
Thanks.